turn the program over to Mr. Cannell.
Mr. Fowler, we've been our original contract with them. And there are some additional options that the city may want to consider in saving some cost for fuel, which is of course the highest portion on everyone's bill. So with that being said, we've contacted Mr. Robert Adley, and he's prepared a presentation to review some of the prepaid gas options and some of the financing that's involved in that.
Okay, Senator Adley.
Thank you very much, and I appreciate the time, but before I go to the slides, I only have 4, so it won't take long, I don't think, to walk through how it works. I thought a little background might be helpful. Governmental entities have been doing prepayments for natural gas since 1991. They have been done in Louisiana, Mississippi, Alabama, Georgia, Florida, Kentucky, Tennessee, and Nebraska. The LMGA just completed its first natural gas prepayment a year ago that resulted in substantial savings for our current members. At that time, Alexandria, along with Morgan City, Gina, and others, were just coming into the gas authority and chose to wait for our second prepay to take a second look to see if you may or may not have an interest in what we're proposing to you. With that said, the first prepayment we did was with J.P. Morgan. This prepayment, at this point, we intend to do a prepayment with Merrill Lynch. I'm going to walk through these 4 slides that will give you basically an overview of how it works, and at any time, I'd entertain any questions that you might have as we move through it.
You need the lights up?
No, I'm just fine with me unless it's okay.
I think it'd be better from a television perspective. We can run the lights.
Oh, there you go. Great. When I finish this presentation and we've answered your questions, I do have 1 sheet of paper before you just to give you an idea where gas prices in the short term are headed and what the city has decided on your hedging for this coming winter. But with that said, let me move. Namby, you're going to help me just hit the enter. This numbered 1 through 6. I'm going to walk through each one of those, and then as we do it, the next page will actually give you a flow chart showing you all of these things. Step 1, LMGA will issue tax-exempt bonds to fund the prepayment. The city will not issue any bonds. The city will not be liable for any bonds. The city will not use any of its credit. It will all be done by the LMGA, which is a political subdivision in itself in the state of Louisiana. The way the discount is determined and the savings that gets created when we prepay Merrill for our gas supply, and we can prepay them for 10, 15, or 20-year supply. They then discount to us because we pay up front. We finance it back with the tax-exempt bonds. Let's say their discount rate is 8%. Our tax-exempt rate is 4%. At that point in time, we create a 4% savings by prepaying up front. Then LNGA will prepay to Merrill for future natural gas that will be delivered under the agreement. And then the LNGA will deliver the gas to the members. Now, in your case, you're connected to LIG. LIG does not have a published index, and the prepayment has to be done on a published index. Hence, your prepayment will be done based upon a Henry Hub index, which means we will continue to purchase your gas at market on LIG as it's done today. Then we will take the prepaid gas that will come in at Henry Hub. We'll do a swap back to either your supplier or others, and gather in the savings that will then be used to reduce the price that you currently pay. You're currently at a market price on LIG. Alexandria's only commitment is to enter into a 100% gas supply agreement with the LMGA. That's the agreement that you currently have with the LMGA. And your current agreement runs year to year. The difference is that if you enter into the prepaid agreement, the term will match the length of the prepay, whether it's 10 years, 15, or 20. The reason for that is obviously we have to have all the contracts in place. to create the security and collateral for the bondholders to buy the bonds. Once we have made that purchase, we being the LMGA, enter into a financial swap back with Merrill Lynch. The purpose of the swap, back up here when I talked about this discount, say the discount was at 8%, we financed at 4%, and we created a 4% savings. You enter into this swap to lock in that savings. And then I think it will be clear when we get to the next page. And then Merrill Lynch guarantees the obligation of their commodity firm under the prepayment to deliver the gas supplies. And Nabby, can we do the... Now this slide is going to be, you take one look at it and see this very exciting slide in that with the zigs and zags and lines, but it is a summary of what we just talked about. Let me walk you through it if I can. Here is the LMGA, a political subdivision of the state. It is going to first sell bonds and be obligated to pay back the principal interest on the bonds. And the second step is that we're going to prepay to Merrill Lynch, and then Merrill Lynch guarantees the delivery of the gas back to the LMGA. From the LMGA, we then take that gas and deliver to Alexandria, either via the swap at the Henry Hub that I talked about, or physical gas. And we deliver to you scheduled gas at market price. And then you pay back to the LMGA that market price less the discount that gets created with the swap. And this is the swap. LMGA enters into a swap financially. And what that means is LMGA then pays index price for the gas, which would be at Henry Hub. They pay back to us a fixed gas payment. Now, it just so happens that that fixed gas payment coming back to the LMGA as it's moved to the bondholders equates to what's required to pay the bonds less a discount and a savings that's passed to you. On the other side, as you can see, they're making an index gas payment for a fixed price payment. All of that results in one thing, creating the dollars to pay the bondholders less the discount. Let's flip to the next one. What this chart shows, this is 75% of Alexandria's historical usage for over 2005 and 2006. Now, we chose 05 and 06 because as I looked at your numbers backwards in time, it appears you lost some volume in the prior years. And so I wanted a more accurate figure to work with. I used 05 and 06. Now, this shows you in the current market the savings that would occur under the prepayment to the city. If we entered into a 10-year prepayment for the city, the savings runs about $400,000 a year for a total savings a little over $4 million. On a 15-year transaction, and let me just say this, when we did our first prepayment, initially our members only wanted to look at 10-year terms. But as the numbers grew, it got so dramatic. Then they wanted to look out into further years. Most prepayments today are being done in the 20-year term. I will tell you, I went to Germany last year, made the same presentation to TK, which was the steel mill that was looking at locating in Louisiana. Their savings under the prepayment was about $600 million. Frankly, the only reason we couldn't get them is that the power costs, the electricity that was coming from Entergy ran about $5 million a month more than the power cost was running in Alabama. So that was $60 million a year to the bottom line, and the $600 million could not offset that. On a 15-year prepayment, the savings to the city is about 55 cents per MMBTU, or about $600,000 a year, and $9 million over $9.5 million over the term of the prepayment. Now, bear in mind that this savings comes on your market price. You continue to buy at market on lid. This savings is guaranteed. Regardless of what the price does, whether it goes up or down, the price floats. But this savings is guaranteed regardless of where it goes. This is what got everybody's attention. On a 20-year prepayment, The savings per MMBTU is about 80 cents. Now, there have been savings that we've seen, frankly, that approach $1 and more, depending upon where the market is. Currently, right now, it's running at about 80 cents. So the savings to the city is roughly $900,000 a year and over $18 million through the term of the agreement. Now, as I understand the city and how it operates, all of the savings in your gas supply is passed on to your customers, which would reduce their cost by some $18 million over the 20-year period of time. Another issue I just wanted to raise to you that's not on this chart, Alexandria is also in the power business, as I understand it. It is possible to prepay for natural gas, and I've not calculated in these numbers, but it is possible to prepay for natural gas that would go into a power plant under what's commonly referred to as a tolling agreement for the city. In other words, the city would provide its own gas supply to the plant. If the heat ratio conversion was 8-to-1 or 10-to-1, if you were saving the 80 cents, it's clear that you could actually reduce the cost of power using natural gas, if that's something you want to do. Yes, sir.
One question. I'm looking at all these numbers look most attractive, but have you factored in, or is David factored in, what the cost is that we're advancing to pay for the bonds?
Well, yes, this has the total cost of bonds in it. The city of
The loss
Alexandria.
of what we would get had we not had the money, you have to factor that cost, do you not? The loss of what we get from that money?
The loss that you get from it. Well, from LMGA's perspective, we don't have a loss because we have no money that we set aside, that we are borrowing the money through the sale of bonds. From the city's perspective, the city is not putting up any money, so the city loses no revenue, obviously, on its funds. The LMGA is there for the sole purpose of finding ways to reduce gas costs for other political subdivisions. And that's all that the LMGA does. And so we're using our bonding ability to do that. And so we don't have funds sitting over that we could actually calculate against the cost of, our cost of funds is the cost of bonds. And that cost is calculated inside all these numbers. Did I answer?
You did, yeah.
Okay.
Let me ask you a question.
Yes, sir.
Is there any allowance, or is this static? I didn't finish my question. Is there any allowance for growth in usage, or are these static numbers?
These numbers are fixed. This is fixed based upon what we purchased in the beginning. These numbers are based upon purchasing 75% of your historical usage to ensure that we're not sitting there with. Tax counsel is very careful to try to avoid having us in a position of having too much tax-exempt cost gas into the open market. Hence, we use about 75%. Now, if you grow, let me give you this example. When we did the last prepayment for our other member cities, their savings is running about 30 cents for a 10-year transaction. When they looked at this savings, that's going to now be available for Alexandria, Gina, Jonesville, and Morgan City, and a couple other cities now that are looking at coming into the LMGA. The question to us was, well, how can we add volume and how can we create more savings now that we're already into this transaction? And what we have done is we will roll into this transaction an additional period of time for the other members, which allows them to take advantage of the higher number blended back in with their current number, getting them from about 30 cents up to about 50 cents. Now, if you grow, as you grow, we can do prepayments at any given point in time. A great example would be, of course, Union Tank Car is already here, but any other that could take advantage of this, but any other industry or someone that you wanted to recruit in your economic development and bring into the city, we could do natural gas prepayments for that volume so that you could insure them a price for natural gas well below the market that no one else could offer them. We're in the process of doing that now for a number of our members who have industries inside their service area. Now those numbers, to give you an example, what that could mean to the city and what it could mean not only to the industrial. The LMGA today uses about 10,000, on an average, 10,000 MMBTUs a day. These industrials use 40, 50, and 60,000 a day by themselves. And so as we pass some savings on to the industrial, and as a member of the LMGA, you will be getting benefit of that. I'll give you a prime example. There's one industrial customer that wants to do about 60,000 a day with the LMGA. Well, if we can carve a savings of a dime out of this 80 cents back to the LMGA, that's a multiplier effect back to you of 6 to 1 because of the difference between the 10,000 and the 60,000, which means just being part of LMGA and a part of a prepayment, not only can you create a savings of the 80 cents, but as we pick up industrial customers and that savings moves into the LMGA, it also comes back to you. That number could grow, in the example I just gave, to $1.40 per MMBTU.
Let me ask another question now. All of these savings are in aggregate and certainly significant dollars, but to the average ratepayer at home with a $120 gas bill, what does that mean to him?
I think Marcus would be the one to have to answer that because I'm not familiar with your breakdown of customers inside the city. I deal solely with your total volumes. But if you were saving $900,000 a year and your annual volume is about 1.6 BCF, you can divide 1.6 BCF by the 900 and then look at your average consumption would be the best way to do it. But I don't have your average consumption out there with your citizens. Marcus?
Is that 2%, 20% savings?
Well, the savings in the end's got to be, if we create a 4% savings by the prepayment, that 4% should be passed all the way down the line. So regardless of the size,
But it should be, in addition to that, we should have an additional savings, am I not correct, Mark?
well, right now at 80 cents, gas prices today running in the $7 range, between 6 and 7, upwards to 8 in the winter. I mean, that 80 cents is 10% or greater. So, I mean, it gets to be fairly substantial.
Mm-hmm.
But that would be the best way I could tell you to look at it.
But it's a fluctuating number. It just depends on the gas market and what the fuel price is that day or that, what we're locking in that day. So, I mean, if it's $7 and it's always 80 cents, the 80 cents doesn't change.
It's constant. So if the price is $5, the percentage is, dramatically greater. If it's $8, it's 10%. If it's 10, it's slightly less than that. It just depends on where the market moves on price. But that number is fixed. But what's really good about that is you're moving up and down the market, retaining the right to still hedge and do all the things we currently do with your hedging. You can still do all that, but that number's constant per MMBTU, regardless of where the price goes. So depending on where the price is, depends upon the percentage.
I'm glad this is not a complicated business.
Well, I know we talk in gobbledygook, but it's the world that I live in, and it's the world that NAMBY and Gordon King and the work that they do as FA and bond counsel. But governmental entities have the ability that you have some assets that you can use to reduce your costs that other people do not have. And that's why, as I said in the beginning, Louisiana, Mississippi, Alabama, Florida, Tennessee, Kentucky, Georgia, Nebraska have all done natural gas prepayments and are continuing to do them. There is a large appetite in the bond market for the prepayments, and so it is an excellent time to be doing it. It's a financial transaction and a firm supply transaction. Yes, sir.
What Mr. Paul is saying is something that all of us are going to have to answer, is when folk at home look at this video, they're gonna ask, well, how much is it gonna save us? So I would like to see something, Marcus, down the line that would say, here's, if the projections are historically like they have been, here's your future projections. And that's all. Of course, we can't commit kind of like a perspective that that's going to actually be what it is, but I'd like to see something based on previous performance, what that would matter.
Translation into the high-low savings.
Yeah, that's right.
That's what we're looking
Before you, this may be helpful too. Before you is this one sheet of paper that I
I saw
don't.
that trend, yeah.
Huh?
It's a good trend analysis, I see.
Well, the good news is it shows you how much the market has fluctuated. I mean, we can take that channel, we can look at it, we can give you what you're asking for on the low and the high side in the current market and where we are. Right now, it appears to me that upper resistance on prices is somewhere around 850 for this winter without, now here's the issue, without a hurricane. Every time we get a hurricane, I mean, we get the spikes in prices, but based upon what we're looking at today, the upper resistance is around 850. The lower resistance is sitting down around 5 to 550. So we could give you, clearly I can give you a range of where the market has been. And I think probably what might be a good thing to do is let us go backwards in time, particularly in the winter months when people are consuming most of their gas, and run you some numbers of what the percentage savings could have been in certain periods of time. I mean, that's the only way I really know how to deal with it. None of us have a crystal ball exactly where we are in the future, but we can look backwards in time, and I can take these charts and numbers and do that. And would be more than glad to work with Marcus to do that. Mr. Silverson, it is a good point, and that's what they asked for. I mean, I understand that. The one thing that we do ask of you, NAMBE has a resolution for the council for you to consider whenever you deem appropriate. The sooner the better. We hope to be in the market with this prepayment sometime in September. This resolution simply talks about your intent to participate. Nothing is locked in until we actually get all of these in place, and then we know exactly where we are on price and discount, and we'd come back to you a second time and say, this is where we are, this is what we're going to do, are you in or are you out? And that would be your call. What we ask for now, as I understand it, and I'm speaking on Gordon King's behalf because he had to be out of state today, he would sit here and explain it to you. NAMBE, you may want to...
Actually, he's explained it particularly well. Exactly, this resolution basically says it authorizes the participation of the city of Alexandria in the Series 2007. Again, you wouldn't make a decision though to actually participate until we come back, provide the information that Mr. Lawson and Mr. Silver asked for concerning individual bills, but it allows us to move forward to go out and sort of solidify these numbers.
No, I don't have a problem with it. We can certainly take it and under advisement, and we'll look at it, and maybe in 2 weeks we can address it. So,
Are there any other questions on the prepayment? If not, I'd like to take just a moment to share with you where we are on your hedging and what we're looking at for this winter. And these two sheets, this one sheet here, I think will give you a good idea. If you look at, you see the blue line that says support. That's current support for the market somewhere near $6. If we break that support, we could actually see something down around $4.50. What's most important about this chart is you look at the lower dark black line that angles up toward the northeast. As you can see, for the last 6 months, the market traded below that line and bounced back up against it. That's creating some strong resistance on prices. It would take something like a hurricane to break that. And so what I think we need to protect against for this winter are prices around the $8.50 to $9 range. That's what you want to protect against. The market is currently trading down, going through some correction, but I expect it to continue down slightly more. And so we have set up a hedge, working with Marcus in the $8 range for about 25 to 50% of your historical, leaving the balance at market, and then fixing the price on some 25 to 50%. I think the number was $8. Was that $8? The other members in the LMGA, what they've done is given me the latitude to be 50 cents on either side of the $8 as I watch the market and make the call. The other thing that I think is important is that you're trying to hedge against winter, which is December, January, and February. When I went back and analyzed prices after Katrina and Rita, the month that we need to protect ourselves mostly from is December. And I'm watching it in particular for the remainder of the members and telling them anytime we get an opportunity to fix some prices, particularly for December, between the 8 and 8.50 range, for some percentage, we ought to do that. Now, that's the best protection we can have against the hurricanes. Last time what happened, December was a huge price up, and then once it all shook down, everybody saw, and we saw huge damage with Katrina and Rita. Obviously shouldn't see it, probably not as much in a long time. But then in January, prices started declining again. So it's very important, I think, to at least look at December and to make sure we have something in place for that. Now, we'll tell you they're still forecasting an active hurricane season, but the forecasts that I read, none of them forecast anything similar to Katrina and Rita. But of course, that's that crystal ball again. I've not found many weather people can forecast much beyond the next hour or the next day. But those are where that's where the forecasts lie today.
Where was the trade in December last year? I know Katrina and Rita certainly spiked it, but where was the trade last year?
Well, last year we reached highs up around 9 and started working our way back down into the $7 range, and then ultimately in December broke below that trend line. And then we broke back above it for like, I think, for a short period of time,
$6
like February, March, and then we came back down again. So, as I said to you before, you want to create your hedges in the first and the third quarter. We passed on the first quarter this year. I was very uncomfortable doing that, but the prices never got below $9 anywhere in the first quarter. And as I looked at the charts, I saw, in my view, a significant decline that was coming, and of course that has occurred. Now, the important part now is we're in this decline, and we're getting nearer to the bottom. And as we get there, I mean, we have to be making decisions. So I can only tell you for the rest of the LMGA, I'm working off of a 50 cent plus or minus $8. In your case, I'm working off $8. And I forget the percentage. Was it 25 or 50? 25%. Yes, sir. Mr. Marshall.
How much have we locked in?
We haven't locked in any at today.
We have not yet. We're down. We've been down to about 8.74. We actually saw 8.49 or 8.47 last night.
How much of the historical are you talking
access
about?
Market.
What are you suggesting to lock in for the historical?
50%.
I'm sorry?
50%.
No more than 50%.
What timetable are we looking at and locking in that price? How much to winter do we have?
We are looking at December, January, and February. We generally don't fix the price in November or March. However, last year in November, as we approached it in October, I did choose to lock in for you in November, and we got in at 60 cents, an MMBTU below the market, which was a good thing. But generally it's December, January, and February, because November and March in Louisiana can swing so dramatically. I mean, it can be 90 degrees in November, and it can be 40 degrees in November. And the same is true in March. I mean, excuse me, December, January, March.
I thought we bought in a small percent.
When we called, it was the authorization to give him a bid to hedge. So he has to receive authorization from us to put in a bid, and he has that authorization to do that. The market has not come down far enough for him to hedge what we've requested.
You hadn't hit your strike price. But we have the order in.
Right. And at that time, we're gonna order 50% of,
25% at this time,
He's got me at 25% at this point.
and then if it continues to go down, we'll lock in another.
That's what I'd suggest. Once you get some in at 8, let's say you get 25%, and as we watch the market, it appears it's going to continue down. I've got the support, as you can see on your charts, at about $7.30. And so once it gets back down, if it gets down towards $7.50, I would suggest you look at your other 25%. If the market bounces off of 8, let's say we get to 8 and it bounces hard, you know, I might be calling you and saying, you know, you might want to consider 8 1/4 or something before this thing gets away from you. But you know, that's what we do in my shop. I mean, we sit there and watch it. Our charts take me down to minute by minute, hour by hour, 3 hours by 3 hours, day by day, week by week, and month by month. And I think the charts I put before you are monthly, because I think they're clearer, with a lot less noise than the rest. But I will tell you that if a prepayment were in place, and you're still doing all of your hedging, that 80 cents is always there. Always there. At least on 75% of the volume. It is always in play. That's what makes it so attractive to consumers. Now, there's one other issue in Alexandria, too. I'm going to raise this issue. No one's asked me, but over the years, as I've watched you, you've always looked at the possibility of going to another pipeline for supply. Entering into the prepayment will not prohibit you from doing that. We just won't quit. You can still do that regardless of the source of the gas, because we plan to place it at Henry Hub. So if at some point you decided crossing that river to an interstate and bringing it in, you could do that. Frankly, my experience with the city has been, when you talk about doing that, that's when Legg talks about getting a little better price on their transport with you. So the chances of actually ever going to that, I think, are probably slim. But if it occurred, I just wanted you to know you can still take advantage of your 80-cent savings.
Anybody have any questions? Anybody from the audience? Senator Adley, we certainly thank you for your report, update, informative undertaking there. And the information that we'd like to get for our consumers, we'll work out and get over the next little bit and present it at a utility meeting. I think we probably could do it in 2 weeks. Marcus, that shouldn't be a big...
Yeah, we're going to introduce, we can introduce that next week.
Okay, and then
I have some extra copies. If you want me to give it to the media, what would you like for me to do?
If any of them care to have copies of it, they can certainly do that.
Okay.
And the copy of that resolution, if you would give that to you, okay, administration has that, and any of the councilmen would like to have a copy of that resolution for review, that'd be fine, and then it'll be in our books in 2 weeks. So, any other business coming before utility? There being no further business, we're adjourned.
Thank you very much.